Well, joining me now at the desk to discuss how currencies are trading is John Cairns, currency strategist at RMB. Good to have you with us as always, John. Maybe let's touch on the big news story that came out last week that everyone was looking out for, as it might have an impact on the currencies. Janet Yellen's speech at the Jackson Hole conference that took place and officially came to an end last week. Any particular highlights there that piqued your interest?
There wasn't that much for the market to take away. If you read the commentary, some people have taken it slightly hawkishly, some people have taken it as a dovish speech. So really not that much in it. The speech, as expected, didn't give any signals on policy, rather focused on the detail about the labour market in the US. Of course, that is the key story. How much spare capacity is there in the US labour market before inflation picks up? US Treasury yields ended up last week higher, not just because of Yellen, but also the Fed minutes coming out. And also don't forget, we had not only Yellen speaking on Friday, but we had Draghi speaking later that evening. And by contrast, Draghi was very dovish. He had slightly hawkish, maybe Yellen, very dovish Draghi, and we're seeing that reflected in the currency markets with big moves in euro dollar.
Let's touch on that, because I understand part of Mario Draghi's mandate is to see the euro weaken ever so slightly. Are we seeing evidence of that in the euro dollar crosses?
Yeah, so I mean, just looking at euro dollar, for instance, we've gone down from almost 140 earlier this year to 132. We've gone from 137 barely 6-7 weeks ago all the way down to 132. So this weakness in the euro has been rapid and quite dramatic, and of course that impacts on the relative rand crosses as well.
Maybe that's something that we need to unpack, because we've seen the rands being fairly range bound and no significant movements. And whenever I speak to you or any of your colleagues, they always say, well, there's not much out there. We're clutching at straws. There is not much volatility out there. Do we know why there's no volatility?
Yeah, so we've done quite a lot of work at this in RMB. So exactly as you say, Gugu, volatility, not only in South Africa but around the world, has dropped to record low levels. It's remarkable. And just as you say, the rand's been range bound now for 3-4 months. Really remarkable how tight those ranges are. Daily moves, you can have 4 or 5 cents on the rand. You know, you used to have like 20 cents on the rand. So look, there's various theories out there about why volatility is so low. Some people talk about the economic cycle. Some say the easy liquidity from the Fed, talking about the bull rally in assets, or the changing in regulations, less traders around to drive the markets. We looked at it, and what seems very clear to us is it's driven by the economic cycle. So in previous cycles, when the US economy really started to accelerate, you saw volatility drop to very low levels. And what's interesting is in the previous cycles, these low volatility environments actually sustained for a number of years. It's not just a blip. So in other words, we could be in for an extended period of quite low volatility.
So when we make reference to the US increasing interest rates together with the Eurozone, and that the fact that could pose a potential threat to emerging markets like South Africa, are we reading too much into the situation?
Yeah, so look, previous cycles when the Fed has been hiking have actually been periods of very low volatility. So Fed hikes haven't disrupted that. Of course, we are now in a completely different environment with the extent of the liquidity injections, the quantitative easing, etc. It's still going to be a big thing when the Fed hikes. That's still, you know, your first question was back to Yellen. That is the major question that all of us in the financial markets need to try to figure out, is when is Yellen and the Fed going to start to hike? That is what's going to drive the rand in our domestic markets as well.
Exactly. But coming closer to home, it does seem as though there isn't much happening locally that is impacting the rand. But I understand we have a lot of data out this week. The all-important second quarter GDP figure, whether that will indicate that, again, we're moving into a weakening environment and potentially a recession.
Yeah, so we had a negative first quarter, so again, if we have a negative second quarter, it will technically be a recession. There are a few analysts out there forecasting the second consecutive quarter of contraction. At RMB, we don't see that at all. We're looking for a relatively good 1.4% quarter-on-quarter improvement, but better than the consensus expectation. But even with that number, we must realize the growth environment is very poor. RMB, we're looking for only 1.5% growth this year. So very slow rates of growth domestically. Far less certainly than we were used to pre-crisis.
1.5%, that's not a very positive outlook, but also some of the other data we can expect later on this week, the credit and trade data as well as local PPI.
Yeah, it's in fact a number of data. Leading indicator, we've got PPI, private sector credit, money supply, trade balance, government financing figures. I guess we'll be, after the GDP, the main ones for us would be the trade balance out on Friday. a very small deficit in the June figure, expected to increase again in July. And of course, our key theme is these imbalances in the South African economy and how they can correct. So what we really need to see is imports starting to slow, exports starting to pick up. That would really be a favorable environment, not only for the rand, but just in general for business and the outlook in terms of growth. After trade, maybe private sector credit probably going to be around 8.5%, relatively unchanged. So again, indicating a very slow growth environment domestically.
Sure. The big question for those watching is, as an importer or exporter, what do I do at these levels?
So still range bound. In a range bound environment, you just use the edges of the rand. So when the rand's up at the 1080s, if we get there, then exporters want to come in, pick up the forward points as well. Importers wait for the 1050s. Very cheap environment because volatility is low. Very cheap to buy option structures, insurance type products as well.
Sure. Well, tough times ahead, no doubt, regarding the currency, but always a pleasure speaking to you,
Thank
John.
you.
That was John Cairns. He's a currency strategist at RM.